This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on March 21st, 2019. Our time is 8:07 Mountain. Yesterday was the first day of spring. Happy first day of spring to everyone. The markets, US dollar, 96.19. Canadian dollar, 74.95. The pound at 131. The euro at 113. Gold at 1,314.70, silver at 15.49, gold-silver ratio is 85. Platinum, 872. Palladium hit $1,600 this week. We'll talk about it in a moment. 1,588. WTI, 60.03. Brent at 68.23. Nat gas, 280. Bitcoin in US dollars, 4,018.98. Bitcoin in Canadian, 5,359.67. The Dow at 25,733, S&P 2824, NASDAQ 12,700, TSX at 16,167. The story on Palladium, and we have this in our free weekly newsletter. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, and we'll be happy to send out the free weekly newsletter to you, the companion to the podcast. Palladium topped $1,600 an ounce for the first time, and there's little sign of the rally slowing as global supply tightens. The price of the metal mainly used in auto catalysts in gasoline vehicles has almost doubled from a recent low in August. Demand has remained robust as manufacturers scramble to get hold of palladium to meet more stringent emissions controls, particularly in China. We had a target last week in a story we talked about of $1,650. Bank of America Merrill Lynch raised its average forecast for 2019 to $1,800, suggesting that prices could surge as high as $2,000 an ounce for palladium. This is amazing, Harold.
It's shocking, to be honest with you. You realize that the highest gold has ever gotten to is 1920. So to think that palladium could actually surpass the highest price of gold is absolutely confusing, to be honest with you. Since we recommended platinum at 800, it's at 875. But again, palladium at $1,600, I just don't see who's buying it. Who could afford to buy it? And the risks of buying it at those levels are extremely high because the majority of people that would actually trade in the market would trade futures contracts, which are very heavily leveraged, and they've got to be raising margin requirements. The only way that I ever would have invested, and the only way that I recommended investing in palladium, back when we recommended it at 170 or 180, was to buy it physically, buy physical palladium coins or bars. Never, ever leverage those type of markets because number one, when the market does end up going against you, you could end up losing more than what you actually put in the market. So if you are going to invest in any of those markets, don't leverage them, just buy them outright. You can go to any local coin store and buy physical platinum if you want and just hold on to it. I think that the price of platinum, even at $875, according to where, it's basically half of what the price of palladium is. It's shocking. And they have the same components, basically. So I just don't see where it's going to take that much of an effort, to switch back to platinum like they did when platinum was at 1,300 and palladium was at 180 or 200. So it's shocking. Good for the metals markets, obviously, to see that type of attraction. But the fact is that it's a ridiculous price, and just goes to show you what supply and demand could do to a price of any commodity.
Platinum. Harold recommended moving into platinum. Investor flows suggest platinum is on the cusp of a recovery. Rapid flows of investor money into physically backed platinum exchange-traded funds and a sharp drop in speculative bets on lower prices suggest the auto catalyst metal is on the verge of recovery. Large supply surpluses and falling demand particularly since the Volkswagen's Dieselgate scandal in 2015 have eroded platinum's popularity to the extent that prices have dropped below those of palladium and gold. Emissions-reducing catalytic converters in diesel vehicles contain more platinum, while sister metal palladium is a larger component in gas engines. So here we are today at about $8.72 an ounce. Palladium is near its lowest in a decade and around a third of its value in 2018. A couple of analysts coming out and saying that looking at it from a long-term value investor perspective, now is the time to put money in, according to ICBC Standard analyst Marcus Garvey. The fundamentals are not particularly exceptional in the short term, but longer term, they have potential, according to Mitsubishi analyst Jonathan Butler. Harold, people agreeing with you, now is a good time to take a look at platinum, and there are different ways to get into that market, physically, ETFs, coins, but platinum looks like it could be on the move very soon.
Well, it already is. I mean, it's moved up $75, so from its low, basically, or when it hit 800. But again, I'm not saying to chase after this market. I'm not positive how high this market's going to go, but there is going to be a time within the very foreseeable near future, that palladium is going to come down. It can't go on forever. Now, again, we've seen in the past what Russia has done, with controlling the supplies of platinum and palladium coming out of Russia. And they can create their own market. It's not a large market. The palladium market is a very small market. It doesn't compare, to the gold market as far as volume type of goes. So, again, it's not something that I would chase. The higher the prices go, the more risk there is. There are ETFs that you can buy, exchange-traded funds. The only way that I would ever invest in metals is primarily for the long term, and that's to buy it physically. And again, in order to buy gold, we would have to see, in my opinion, again, this is just my opinion, but gold would have to close 2 times in a row above $1,380 to convince me that this market is now going to break out. Now, there's a lot of analysts coming out right now and are saying that gold's, out of its bear market. It's not out of its bear market until it closes above 1380 twice in a row. So we'll have to see what happens with that. Every time we've gotten close recently, the market has backed off. And we'll have to see what happens as we get closer. We're sitting right now at around 1310, 1315 in that area, so it still has a ways to go. But again, the magic number for gold is 1380.
Connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Learn about investing in hard assets. The Fed held the line on rates and did something somewhat shocking. They said no more hikes ahead this year. The benchmark rate was kept at the range of 2.25% to 2.5% as expected on Wednesday. The Fed set their end of balance sheet reduction for September. They had $4.2 trillion on the balance sheet. It has been reduced by about $450 billion in the program that began October 2017. This is a major change, Harold. Remember, towards the end of 2018, the Fed was saying they were looking at maybe raising rates 3 to 4 times in 2019. We have seen a major reversal in what they had said they were going to do. And I would imagine that they see something in the economy that is not good.
I don't believe that they would have changed their view without tremendous pressure from Trump. And he was on them about this. You don't all of a sudden have a plan to raise rates primarily because of inflation. And the fact is, all of a sudden, it's disappeared. It hasn't disappeared. Nothing has changed. The fact is that the debt is still $22 trillion. The fact is that the government's still shut down. The fact is that we still have tremendous problems within the market. You've got total division of people within the United States. I mean, more so now than ever before. You've got the filthy rich, and then you've got everybody else. So, again, it's a very difficult time, and I find it almost impossible to believe that that has all corrected itself. What I do believe happened is that Trump has approached the Federal Reserve and said, this is what's going to happen if you continue to do this. And he persuaded them not to raise rates. And that's what I believe happened, because it doesn't change that quickly. And the fact is that the dollar is trading within a range, but it's still strong. It's trading at 96 to 97 cents. Don't forget, when Trump first came on board, the dollar rose all the way to 103. And we thought that that was going to be a sign that the U.S. was getting stronger and stronger and the dollar was getting stronger. And by raising interest rates, it also strengthens the dollar. So now by not raising interest rates any further, what type of message is that sending to the market? Does it say that things have actually gotten better and we don't need to raise rates? Nothing has changed. In fact, the situation has gotten worse. So I don't buy the fact that all of a sudden that the economy has improved so dramatically that there's no need to raise rates any further. What I believe is that there was so much pressure put on them that they decided at this point here just to hold off on raising rates. Nothing changed in the market that would have persuaded them, aside from Trump, to do that. So that's what I believe is the problem.
Here in Canada, some dire news regarding the Canadian dollar. It's in our free weekly newsletter if you missed it. TD Bank predicts the loonie may fall to 71 cents US as the Canadian dollar's outlook shifts considerably. A strong start to the year for the Canadian dollar, rising 3.5% against the greenback in the first 2 months after a nearly 8% drop in value last year, had many wondering if this was the year the loonie would stage a comeback. But since the start of March, the Canadian dollar has fallen 1.3% against the US dollar as prospects for the Canadian economy have also dimmed. And remember, we have a federal election coming up in the fall, and here in Alberta, there was a provincial election called this week. Gross domestic product, GDP, contracted 0.1% in January, following a deeper than anticipated slowdown than in the second half of last year. Strategists at TD Securities say the Canadian economy has a real problem on its hands, which will lead to broad weakness for the currency going forward. They predict the loonie will spend much of this year in a range where it will cost between 135 and 140 Canadian to buy $1 US. Put another way, that means it could slip to as low as 71 cents US against the greenback. That's more than 5% decline from its current 75-cent level. Prospects for the Canadian dollar have shifted considerably to the downside over the medium term. Now, this is the story that really caught my attention. I've mentioned before on the podcast, it was back in 2001. I went to Maui. George W. Bush was being inaugurated at that time. The Canadian dollar was around 63, 64 cents. Well, Fidelity's Wolf is saying the loonie could test 62 cents. David Wolf is with Fidelity Investments. A 17% drop from current levels of around 75 cents US may sound a lot, but the currency has already fallen 30% from above par in 2011 when Canada's economy was doing very well. Harold, they are saying that we could see 62 cents, and that would take us back to where we were in the early 2000s. This is something that must be watched.
You know, the fact is that if the Canadian dollar has dropped to that 61 cent level, that's very, very dangerous. Now, we have been there before, but it was not a good situation. And seeing that the overall economy in Canada is hurting at this particular point, a weak dollar like that is just going to be horrendous for the country. The only thing it would be good for is exports. You know, Canada obviously is a big exporter of commodities, and, you know, that would be the only benefit that I would see. It would basically cease travel, you know, for Canadians going to the United States or any country that has a stronger currency. Because at 60 cents, where would that put the U.S. dollar? That could put the U.S. dollar, you know, back up over par, and that would mean there'd be a 40% difference between the Canadian and the American dollar, and I just don't see how in the world that that's going to work at this particular point. It would just put all that much more pressure on Canada and Canadians, and again, try traveling when your dollar is almost, you know, cut in half. It's a horrible situation, just a horrible situation. And the fact is that the U.S. dollar, even though it's trading in a range at this particular point, it does have the potential to fall, because of Trump and because of Mueller and because of these investigations, if anything was to come from that and Trump was to get impeached or thrown out of office, that would definitely hurt the markets tremendously for the short term. We would basically see the stock market fall out of bed and we see the US dollar tumble. So that is one scenario that could offset over the short term, a heavy drop in the Canadian dollar. And it would be very, very difficult for the Canadian dollar to drop 60 cents against the U.S. dollar if the U.S. dollar got into trouble. So that's one scenario that could change the entire outlook of that particular story.
From poster child to problem child, the Canadian dollar in 2019. Read that story in our free weekly newsletter. A new report from debt experts HES, Mikolos and Associates shows millennials now account for 37% of insolvency filings in Ontario, compared with 14% in 2011. The reason is simple. Millennials, and this would be the same for the United States, are a generation buried in student loans, which is why we are seeing such a dramatic rise in student debt-driven insolvencies, according to a new report. StatsCan says household debt grew faster than income in the fourth quarter. The amount Canadians owe relative to their income, $1.79 in credit market debt for every household dollar of disposable income. The average Canadian home sold in February, the cost $468,350. That was down 5.2% in the past year. We did have a federal budget this week from the Liberal Party, and they do have a plan in place to help first-time home buyers. Some people are worried about a bubble as a result of this home buying program that may save the Canadian home market in the short term. Harold, I'm a Canadian. You're a Canadian. We love Canada. And right now, though, because of a multitude of factors, things look very difficult.
They really, really do. And let's not forget what happens when the Canadian dollar falls as it is and has the potential to do. That's when foreigners come in and buy up all of Canada. They buy all the prime properties. They buy everything that they can get their hands on. Look what happened in Toronto and Vancouver. So, you're going to get a lot of the people from the Far East, from the Orient and that, coming in with a stronger currency and buying up everything that they can. And will that raise the price of real estate, or it'll sustain it? But the fact is, just look at the assets that Canadians are going to lose to foreign buyers, and this has happened in the past, and it will definitely happen again, because again, a 60 cent or a 62 cent Canadian dollar would just invite this type of robbery where foreigners come in and just buy up all Canadian assets, and that's a real shame.
Now, I love, as a Canadian, the people of the United States. They're great people. I love the United States, too. But I guess the saving grace of being a Canadian is we don't live in the United States. And the reason I say that, just wait till you hear some of the promises that were made. Quite a few people running for the Democratic nomination to run against U.S. President Trump, and they're out on the stump making promises. And some of these promises, oh boy. Senator Elizabeth Warren, she was in a CNN town hall meeting. We know that the Green New Deal, the projected cost is $93 trillion. Well, during the time that Warren was on this town hall, she made promises that added up to $100 trillion. It's scary, but it gets better. Here's how long-shot 2020 candidate Andrew Yang would reshape the United States. He's been saying that he would like to give everyone $1,000 a month. Every American aged 18 and over, $1,000 a month. Alexandria Ocasio-Cortez, everyone's favorite socialist liberal, her approval rating in New York has declined following the Amazon collapse, the deal that they were going to move in there and set up a new office. She was against it, and now she's starting to feel the consequences from those that elected her. Harold, the United States has $22 trillion in debt. You're looking at, if these people actually got their way, $93 trillion on the Green New Deal, and then you have Elizabeth Warren, $100 trillion. Free stuff for everyone. Hey, why have a U.S. currency? You could just use monopoly money, or maybe currency from Zimbabwe. Harold, this is a crazy time we're in.
I mean, I can't believe that these people actually got into into office. How foolish and stupid could you be to make those type of promises or even assumptions that can be done? So, it's frightening. The decisions that are made in this country are made for us. We don't make those decisions. These are decisions, as a businessman, I would never, ever make, obviously. With $22 trillion in debt, I don't know what would happen at this point if the Democrats got back into office. I mean, would there be a mass exodus? Would the wealthiest people in the United States expatriate and go to another country? Not an easy thing to do. But the fact is that if there's people in this country, like Warren and Cortez and Bernie Sanders and things like that just want to absolutely rape the people that have worked the hardest, to make the money, that pay the taxes, that do everything, that run the businesses, that, employ everybody. If all that motivation is taken away, if you can no longer make money without giving it away to everybody, I just don't see the point of being in business and staying in this country. And I really do believe that we will see a lot more people expatriating if the Democrats get back into office. And again, I really can't even stand to read what these people are saying, but you do it just out of absolute, I don't even know what the word is. It's disgust, or you just can't understand how people that are supposed to be intelligent could be that stupid. So I don't blame you. I'm a Canadian living in the United States. I love living in the United States. I've got a lot of great friends here and a lot of great business contacts and all that. But you've got people making decisions in the form of politicians for us, and these decisions we have to live and die by. And the fact is that these are decisions that most intelligent people would never, ever make.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Gem Diamonds nets $8.8 million for a 13.3 carat pink diamond. African-focused Gem Diamonds sold that diamond. It was recovered from its flagship Letseng mine in Lesotho last month, and you can see a picture of it in our free weekly newsletter. It is absolutely gorgeous. At some point, it will be polished and cut, and it will be an amazing diamond. Now, Graf, they are unveiling, as of today, 3 fancy, vivid yellow diamond watches. It's the 2019 edition of Basel World. And Harold, I have a picture of one of them in our free weekly newsletter. They are absolutely gorgeous. The thing that I've really come to realize about the diamond market, you started rarecoloreddiamonds.com back in 2005. You were so far ahead of the game of getting people involved in the rare colored diamond market, investing. As a result, people have done very, very well. In good times and bad times, diamonds do well. And we're seeing it when you take a look at a pink diamond selling for $8.8 million, or these yellow diamond watches. Good times or bad, diamonds are very consistent investments, and it's great to see.
Vivid yellow is the highest saturation of color, so those watches are priceless. I mean, they're so magnificent. And Graf, to me, he is the king of diamonds. What he's done with the diamond business, and he started off as an apprentice type of thing, and now he's a billionaire and owns some of the most amazing diamonds that the world has ever seen. So he's just done a phenomenal job and continues to do so. The fact is that how many people can lay out $8.8 million or $20 million or $30 or $50 million for diamonds that certain people have bought during these last couple of years? So obviously, there's very few people that could afford those type of diamonds. But if you look at results from Christie's and Sotheby's and other auction houses, those are not the only diamonds that are being sold. Prices that are, diamonds that are priced intermediately, like $100,000, $50,000, $200,000, those diamonds go up substantially also. Back in 2005, when we first got started, and we started recommending diamonds. And the major reason we recommended diamonds to our Canadian clients back then is that the Canadian and American dollar were basically even at that point. And we felt that the U.S. dollar was going to strengthen and the Canadian dollar was going to weaken. That's exactly what happened. And now, sitting at this particular point, that just on the currency alone, that our diamonds have gone up by over 30%. If the Canadian dollar drops to 60 cents, then we're looking that these diamonds are up almost 50% just on the currency alone, let alone how much these diamonds have appreciated. Then, as somebody who has been in the financial business as long as I have and in commodities and understands supply and demand, we saw the phenomenon of the Argyle mine. The Argyle mine was discovered in 1986, one of the largest producing diamond mines in the world, producing over 30 million carats of diamonds a year. Those are mostly low-grade industrial white diamonds that are used in diamond bits and diamond drills, to cut other diamonds. But out of this mine came the world supply of pink diamonds. 95% of all pink diamonds in the world come from the Argyle mine. Now, that is not a large number. In actual fact, it's a very small number. Very few pink diamonds come out of the mine. If you look at the Argyle tender each year, where they take the top diamonds, the top 55 or 60 diamonds that they have actually mined during that course of the year, they sell it in the Argyle tender. And those diamonds have done nothing but go up in value. But again, if you take the whole year's supply of those diamonds, it won't even fill a champagne flute. That's how small the pink diamond market is. So it certainly occurred to me that if the mine that produces 95% of the world's pink diamonds is going to close in 2020, and there's a very, very limited supply, and that's where almost all the pink diamonds come from, well, then the prices have got to increase. I mean, it's just like palladium, isn't it? That the supplies are so low and the demand is so high that the prices have reached astronomical numbers. Well, we believe the same thing will happen with pink diamonds from the Argyle mine, and that's what we have bought personally. I've got my own collection of Argyle pinks and my clients' own pink diamonds that we bought 10, 15 years ago. And the fact is that these diamonds have gone up by 10 or 15, sometimes 20% a year, depending on the rarity of it and the how substantial the color is. Like, for example, vivid pinks have gone up more than any because it's the highest saturation of color. So what we believe is that the mine is going to officially close next year, 2020. There will still be some diamonds lying around. So there may be one or two tenders after that, which are talking maybe 50 to 100 diamonds. After that, there will be no more production of pink diamonds. So what will our pink diamonds be worth? We also own H. Siegel Fine Auctions. H. Siegel Fine Auctions hasn't done any auctions recently because we built this business based on us selling our clients' diamonds down the road, and we really built that auction site, for our Argyle pink diamonds when we go to sell them. So I'm very, very enthused and excited about that. We feel that this is a tremendous winner for our clients. We believe that the prices will increase substantially, but so will the currency. So I think it's a double hit for us that we'll make money on the diamond, and when we convert the diamonds from American back to Canadian. So we're very excited about that. The mine is going to close next year. So all of us that have been holding on to Argyle pinks for the last, 10, 12, 15 years, we're going to have a tremendous opportunity to sell them. But we're planning on selling them in about 3 to 5 years when there's no more diamonds left, and then we think that the demand for our diamonds are going to be very, very high. So that's why we introduced diamonds back then. The main reason was because I felt that the currency was going to change, and that definitely did happen. That alone added 30% and possibly as much as 40 to 50% to the profit line, let alone what the diamonds are going to go up just by sheer increase in value and supply and demand. Now, we also have offered yellow flawless diamonds. Yellow flawless diamonds are the only diamonds that you want to own that are yellow. The fancy yellows, the fancy intense yellows, and the fancy vivid yellows. They've also gone up in the currency, and they've gone up basically because of the rarity of them. And all we've ever offered to our clients were the flawless yellows. So basically, there are very, very few flawless yellow diamonds left on the marketplace. When we decide to go ahead and start selling some of our yellow flawlesses at auction, we believe our clients will do very well on the sheer appreciation. They go up by about 10% a year. And then on top of that, the currency difference. So we're excited about that. We're in no hurry to sell anything. Diamonds are a longer-term investment. But again, just realizing what's happening in the American and Canadian dollar is reason enough to be excited, let alone the fact that we own some of the rarest diamonds. And we're not talking about $20 million diamonds. We're talking diamonds that our clients bought when they were $7,000, $8,000, $10,000, and now they're $20,000, $25,000 for those same diamonds. Then add 30% more to the currency, and that's how well we've done on these diamonds. So again, we are planning on starting to do auctions again in the very, very near future. We do have some clients that are looking to put some diamonds up for sale. However, not many. So that's why we have not held any auctions in the last couple of years, because very, very few clients were selling diamonds at that point.
Connect with Harold at rarecoloreddiamonds.com. Quick hits before we end. Jamie Dimon says we've split the U.S. economy, leaving the poor behind. He's the CEO of J.P. Morgan, points to two Americas, one that is benefiting from a thriving U.S. economy and the other that is struggling. It is absolutely obvious that a big chunk of people have been left behind. Superfast travel using outer space could be a $20 billion market, disrupting airlines, UBS predicts. Electric vehicles could cost the auto industry millions of jobs, according to a top analyst. Uber's eye-popping $120 billion valuation, worth more than 3M and PayPal, if you can believe it. Here's a company losing billions of dollars. More households subscribe to streaming than traditional television. Harvard University has uncovered a DNA switch that controls genes for whole body regeneration. That's something that they're working on. The happiest countries in the world: the number 1, Finland; number 2, Denmark; 3, Norway; 4, Iceland; 5, Netherlands; Switzerland 6, Sweden 7, New Zealand is 8, Canada is 9, and Austria is 10. The 180-year-old Swiss watchmaker Patek Philippe is not for sale, according to the chairman. He wants to pass it on to his children, grandchildren. Another Bitcoin bull market is coming in 2018, according to Fundstrat's Tom Lee. We've seen Bitcoin pop up here beyond the $4,000 level. And finally, Harold, in the world of crazy sports contracts, they say he's the greatest player in Major League Baseball. His name is Mike Trout. He's with the Los Angeles Angels. $430 million. That is the contract he will get over 12 years. He is the Mickey Mantle of baseball today. $430 million. That is a lot of money, Harold.
Is that guaranteed?
That is all guaranteed. In baseball, all the money is guaranteed, unlike football.
Wow, that is unbelievable. Well, congratulations to him. If he can do it, and he's that much of an asset to the team to where their viewing audience is that much bigger, and then congratulations to him. He deserves it. And, at this time where sports, superstars get paid the most unbelievable amounts of money, people lose themselves in that and live vicariously through their sports stars. And, it's an out for people that are, stressed out and not doing as well, obviously. And, they can rely and go back and watch sports, and that's where people tend to lose themselves. And, that's why these guys get paid so much money.
And on a closing note, Harold, we should mention the shooting in New Zealand. Another tragedy, but very different response. All military-style semi-automatic weapons, assault rifles, and high-capacity magazines will be banned in New Zealand following the mass shootings at 2 Christchurch mosques that killed 50 people. That, according to the Prime Minister, Jacinda Ardern. That was announced today. So you can see, compared to Canada, where we've had shootings, or the United States, a very different response. It's good that they can make these decisions and do it very quickly. Our thoughts and prayers to all of those people that were affected in the shooting, Harold. A tragedy.
You better believe it. There's just way too many of these. I've mentioned it before, but after the Parkland shooting last year, there was 40 other attempted shootings. It's quite scary to see this young generation. I can't quite figure them out, but it's spring break here in the United States, and 600 colleges, were let out, and a lot of those kids come to South Beach in Miami and Fort Lauderdale, and you would not believe what's happening here. I mean, the fighting, the fist fights, and it's so frightening, Randy, that you see that these Kids cannot wait to get involved and inflict pain on whoever they possibly can. I've never seen anything as disturbing as these videos that came out this week of these fights that have started on the beach and on the streets and things like that. And all the business in the world isn't worth putting up with what these kids are doing when they come down here. So I know that spring breakers have been banned from other areas. I believe that's going to be coming to South Florida very soon, because after this year, I just think everyone is just disgusted with the way that these kids are acting.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. It was a busy week. We had palladium hitting 1,600. The Fed saying no more rate hikes in 2019, possibly a cut at some point. Two different rating agencies coming out and saying that the Canadian dollar could go to 71 cents or 62 cents. So it's an interesting time. We have an Alberta election underway. Now is the time to stay tuned to our podcast on a weekly basis. We will keep you updated on everything that is happening. Harold, any closing thoughts?
Yeah, just be very, very careful. These markets are not conducive to making money right now. There's way too much risk in there. The markets are trading sideways. The Dow is going nowhere. The dollar is trading sideways. Commodities, even though a few are in the limelight like palladium, the risk of trading that market is extremely high. Don't leverage anything at this particular point, because, again, there's too many situations out there that could turn these markets. One of them is what's happening with Trump. The other is a $22 trillion debt. I mean, we've got Democrats that want to turn the United States into Venezuela. So, again, you've got people involved in the markets and making decisions for us at this stage of our life that shouldn't be making those decisions. And some of them are going to be detrimental to the way that we live our lives. So be very, very careful. Don't just speculate in a market for the need of making money, unless the market is right, just like with gold. Unless it breaks 1380 and closes twice above that, we don't buy gold until those prices are hit. Anything before that, you're taking a huge risk. So my recommendation is to sit back at this point here. Don't take any unnecessary risks, and let's just wait for the markets to come to us. I want to wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com. That's it, another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.